Okay, in this lesson, I'm going to talk about the valleys and peaks, swing lows and swing highs. And maybe you will find this boring, but I can tell you that 100% of all the students I've coached have struggled with the valleys and peaks. They believe that they can do it better than anyone, and that this is very simple, but it is not that simple, because sometimes you will mix or think that a valley is a valley, but it is not, and it is a CP and vice versa. So on this video, I'm gonna be choosing stock cryptos and forex cross pairs in different time frames, and I spend here quite some time like going over, drawing trend lines the way we should, and explaining some of the nuances and scenarios that can occur when you try to draw trend lines. And this is very important because trend lines are crucial to detect imbalances, and also it is crucial for multiple time frame analysis and the realignment rule that you will learn further in the course. Okay, so having said that, I have here Apple weekly time frame. Like I said, I'm going to be switching from one time frame to another, so we can learn about trend lines and what we should be doing and everything. So here, this is a trading view. I'm going to be using the trend line tool. So what we need to do when we analyze a chart, we should always start from the right side, always, and then we go back in time. Okay, following price action to detect the trend line. Since we are going to be drawing trend lines, bullish and bearish. So in this case, we have a clear uptrend on the Apple. It has actually reached an imbalance on the weekly time frame. We're expecting a reaction from here. I just recorded a video like 2 days ago. But this is another thing we're going to look at when we do top-down analysis and planning a trade and everything. But like I said, so we start from the right side, and we are going to locate strong impulses on the way down, strong impulses on the way up, and then like this, okay? So for a valley to be drawn, okay, to be considered valid, we need like a leg in, okay, a leg in, like this one, a basing structure, okay, a pause, like this one, and then we need a leg out. And the leg out should print a high above the previous or above the leg in, always. Otherwise, we don't want to consider that as a valley. Because what we're going to do is when we have two consecutive structures like this, we are going to be able to draw the trend line. So this structure has to be like this, okay, for the trend lines. We're going to see that in the trend line lesson, okay? So what we want to do is locate that, and we don't want this. Okay, people will say, oh wow, here, okay, there is a lower low there, so this is a valley. No, that is not a valley. Okay, we want full candlestick like this one. Okay, you see this is a rally, this is a small candle, basing candle, 50%, and then we've got a large candle on the way down, and then we have two full candles underneath that structure. So it means that we have one structure here, another structure here. So this cannot be part of a pause or a CP continuation pattern. This should be the legging of a valley, legging, basing structure, leg out. So this would be our first valley, okay? For the peaks, it's the same thing, but the opposite. We've got the legging, it bases, it loses strength after rallying for 1, 2, 3, 4, 5 consecutive weeks, okay? Then it bases, spinning top candle. This is like, this is not a shooting star, almost a doji. So this is an evening star, ERC, extended range candle, basing structure, ERC, extended range candle. So this is an evening star. It doesn't matter the name that you give these formations. We just want to have the structure here. So for this is clearly a peak, okay? But for the trend line, in order to draw the trend line, we will see later, we need at least the low to be broken and then two consecutive ones like this, okay? But for now, we are going to detect the valleys and the peaks. So this is the structure we want, a rally, basic structure, and a drop. So this is great, and this one is great, but this one over here, this is not a valley. Okay, this one here is a valley, one structure, two structures. Okay, so when we draw trend lines, we will do like this. We've got a weekly uptrend with demand in control trying to play out right now on Apple. Okay, so here clearly, look at this, price drops heavily. Okay, with one candle closing below all this, but closing is not enough. We want full bodies. Okay, another one closing below, sorry, and then this large candle there closes clearly below. Okay, full candle. So that is a nice valley. Okay, when we go left here, we stop here. This is not a valley. Okay, but some people will say, okay, this is an ERC basing candle 50%, and then a rally. No, it is a rally. It bases, same structure, same range. Okay, it doesn't even close above below. But we don't want to close above or below. We want large, like a candle like this or like this, in order to consider it a peak or a valley, like this one. We want something like that. We don't want two candlesticks sitting in the same price range. That is not the look of a valley or a peak. Okay, this is a pause. The same way this is a pause. This is a rally and a base and a rally. This is considered a CP. Okay, continuation pattern. And same here. But when we get down there, this is clearly a valley. Okay, price has all this is considered the leg in. It bases, and the leg out is all this. All these CPs over here, the formations, are not considered as obviously valleys, okay, but all this is part of the leg out of this valley. The same way that this peak over here, because this is a rally, look at this, one structure here, legging, full candle above the legging structure, and then it prints a low below this low here. So this is a clear peak. Okay, this is not a clear peak. As you can see here, it drops, basing candle, basing candle, basing candle, basing candle. Oh wow, we've got a large candlestick body, yes, but it's still in the same range. So we do not consider this a peak, even though we have a large candlestick body over there, because it's trading in the same range. Okay, so structures like these are the ones that are complicated. And then, like I said at the beginning of this video, I have been coaching hundreds of people. Okay, and believe me when I say that there's no exception at all. I mean, 100% of all the students have struggled with valleys and peaks. Okay, they will consider strange structures like this, clear structures as per the rules, like this, to be a valley, and then this will be a peak, and then obviously they will draw trend lines incorrectly, etc., etc. And then if you draw the trend line incorrectly, then you're gonna get the wrong trend and the wrong realignment exercise to pinpoint with a very high degree of accuracy the next place where we can start placing a trade, a long or a short position. So it is very crucial that you understand that you don't need to be smarter than anyone. Okay, you just need to follow the rules. Okay. If we continue to the left, okay, like I said, let me do this. So here we've got a valley. Here we've got a drop, base, drop. This is not a peak, obviously, but this one here is a peak, as I said, okay? And this one is a clear peak. It rallies over here like this. This is the leg in, it bases, and then the leg out stops there. So once price stops and creates a basing structure, that the leg out stops. Okay, then it rallies again, bases, and then it drops all the way down here. So this one together with this one are the only two picks in this structure. The rest is a mess and is made of several CP or continuation patterns. Okay. So when we come to the lesson about the trend lines, we will be able to draw the trend line like this, okay? And the ordering of the move will create an imbalance, and this will be a CP. continuation pattern that also broke the all-time highs. But this is what we're going to see later as we move to the more advanced, not advanced lessons, but we move in the course, okay? So if we continue to the left, okay, I'm going to do a few more, and then I'm going to switch time frames and other assets. We're going to spend probably half an hour or an hour talking about this, okay? Because there are so many different structures, because price action combinations, candlestick patterns are unlimited, okay? And we don't know what type of pattern we're going to see. And we can see like single candlestick patterns, 2 candlestick patterns, 3, 4, 5, 10. I mean, that's so many, okay? So what we have here now, as we continue to move along to the left, okay? This is a drop, the leg in, it bases, and then it rallies very, very strongly, okay? So this is a clear valley, and this is a clear peak too, because we have a rally, base, and a drop. And as you can see, this candle over there, the white one, is fully closed. Okay, the full candle is above this structure. So we cannot consider all this a single structure. It's made of 2 different structures. And if we start reading price action from the left, from here until down there, I'm gonna look at this way. Rally. All this, as you can see here, is rally, base, rally, base, rally, base, rally, base, rally, base, rally. Okay? These are all continuation patterns. Okay? We do not have any valleys. We need a valley like this for a valley to exist. We need this. Okay? And this never happens. So the market is here. We say it will be overextended, as we will see later in another lesson. So we've got rally base, rally base, rally base, overextension. When that happens, we wait for the origin of the move, which is what happened there. Okay? And it's been respected for, well, many weeks. So we've got the structure here. We've got a peak, leg in, base, drop. So leg in, base, leg out. So now we've got the leg in for a valley, the base, and the leg out. So we've got a valley here, a peak there, and again here we've got a rally, leg in, and then it doesn't base. And this is also a valid valley and peak. For a valley or a peak, we want a valley, a near, a leg in made of ERCs. It pauses, and then a leg out. Okay, or we want a drop, okay, the leg in, and then instantaneously the next candle rallies. Okay, so like a V-shape reversal. And the same for a valley. We could have a peak, like this, with several candles at the top, like this one over here. Then the leg out, okay? Or we could have like a rally and a drop, okay? 2 candlesticks, or a series of candlesticks, and then 1 single candlestick dropping very strongly, which is exactly what happens here, okay? We've got a strong rally, and then it doesn't base, like this structure or this structure over here. It just rallies and drops. So that's also a peak, okay? So this is a structure of a peak, which is the most common structure, is the legging. It bases, creates like engulfing patterns, bearish candlestick patterns like the evening star, or engulfing pattern, piercing pattern, bearish pattern, that cloud cover, spinning tops. There are many patterns that we can find there. The names are irrelevant as long as you understand the structure. Okay, we have 3 features: the leg in, the base, and the leg out. Okay, leg in, leg out. The basing structure is made of the 2 legs. Okay, and here we've got the rally, leg in, base, leg out. This is the leg in, base, leg out. Okay, and it has to be very clear. I mean, clear and obvious. And then many people ask me, what is clear and obvious? Clear and obvious. Okay, this is not clear and obvious. But then people will say, like I said, I mean, many of the traders have been coaching, but this is an ERC. So this is a drop. This is a base, and this is a rally. So this is a drop base rally. This is a valley. Nope, because it is happening in the same range. Okay. Oh, but this goes like below. It wicks down over there. Okay, this is a valley. Nope, it is the same range. Okay. So what is clear and obvious? Isn't this a clear peak? Of course it is a clear peak. Is this a clear peak? Of course it is a clear peak. So I'm asking you, okay, not you directly, but this is a rhetorical question. So is this or this one the same as this one? Nope. This is clear, not clear. Okay? So we want the peaks and the valleys to stand out so clearly that there will no way for you to make a mistake. Okay? And if it doesn't look clear, it has to be a continuation pattern or a mess. Okay? So, because in the market, when you look at the charts, you are gonna see really three types of structure. Okay? We're gonna see valleys, we're gonna see peaks, and we're gonna see continuation patterns. So peaks, valleys, and continuation patterns. There is no other thing. No matter how you look at the charts, those are the only three structures you're gonna see. You may be thinking that there will be others because you call them or you've been taught that there are other structures, but I'm not trying to give names to candlestick formations. I'm just talking about in general, in a broad, general way, there's nothing but three structures: peak, valley, and continuation patterns like this. The rest is just like this: rally, drop, rally, drop, rally base, okay, drop base, drop base, drop base, okay, valley, CP, rally, CP, peak, valley, CP. There's nothing else, no matter how you read it, okay? If you understand these concepts and you make like a very clear decision that you are going to be focusing on the very clear structures, then you are not going to be into trouble. Okay, you're not going to run into trouble. So this is Apple weekly time frame, but let's go to the daily time frame. Okay, the daily time frame can get a little bit complicated sometimes on stocks. Why? Because the stock market, the US stock market or any other country's stock market, is not a 24-hour market like this forex market or crypto market. Okay, it is only open for about 8 hours depending on the country. So a daily candle is usually made of 24-hour candles, or if we are using the 4-hour, which is very typical, very common on forex and cryptos. So a day has got 24 hours, okay, divided by 6. By 4, okay, it will give us 6 candlesticks, okay? So for the American market, for the stock market, a daily candle will only have 2 4-hour candlesticks because the market will be open about 4 hours, okay? So, and there will be pre-market and post-market movements. Almost always we're gonna see smaller time frame gaps, which is why you will see this. Okay, price, the candlesticks closes here the previous day, and then it opens here. The next day it opens here. Okay, when it closes there, it opens higher. Okay, here it closes here, and then it opens here. Another gap in the smaller time frames. Okay, here it closes there and it opens there. There's always like a small gap. Sometimes they are like super strong gaps, okay, that you will see on the daily. Well, here we've got a gap. I mean, the candlestick sorry, closed there the day, the 18th of September 2024, and then the next day it opened like about 1.83% higher. Okay, so there was an intraday gap over there, and the same thing on this. Okay, that's why the daily price action could be a little bit tricky sometimes. Okay, to detect valleys and peaks. Okay, so all these that we can see here in the daily are the 4, 5, consecutive ERC candles that gave us overextension in the daily. Okay, so here, if we start reading from here, okay, so we've got like a structure here, basic structure here. We start always from the right, and then as you can see, we've got a full candlestick above this structure there. So there is one structure here, one block, and there are two blocks. And continuation patterns do not have different blocks. A continuation pattern is a single block of price, like this one over here, rally-based rally, okay, without these candlesticks happening above or below, because when they happen, they become either the leg out of the CP or the leg out for a peak in the bullish rally. Okay, so here we've got a clear peak. This is not clear at all. So Matt, okay, I'm gonna warn you on this. So I've got many traders in the past, okay, and currently too, that they will say this is a peak. Why? Well, because we've got like here, we've got price closing here, and then it wicks up over there. So this is a peak. No, it is not a peak. We've got a drop, and we've got a basing structure made of 1, 2, 3, 4 candlesticks, whose bodies are smaller than the distance there is between of the 2 wicks together. So this is a 50% candle. It means that the body together with the wicks, the 2 wicks are larger than the body, so this is a 50% candle. So this is a pause. This is part of a pause on the way down, and a pause is a continuation pattern. Okay, we're going to see more about this on the continuation pattern lesson. Okay, but this is not a peak. So, but I'm talking out loud. Okay, I'm not referring to you specifically, but do you think that this structure is the same one as this structure? No way. This is a rally made of very large ERC candles, okay? A basing structure and the leg out. This has not a single ERC. For a valid or a peak to exist, we need ERCs, okay? We need ERCs. Or, exceptionally, we might see some of these scenarios as we analyze this, other assets. Imagine this scenario. We've got this candlestick, imagine it, okay? We've got one there, another one there, another one there, very small candlesticks. Obviously, that is also a peak, okay? Because even though they are 50% candles, if we start having like a stair-step leather formation like this, and it goes like this, obviously, that is obviously a peak, okay? But if what I'm referring to is if price is within a tight area, okay, and we don't have ERCs within this area, we consider this a CP, and this is exactly what's going on over here, okay? We want a serious candle like this or like this here in order to consider this to be a peak, okay? So in this case, when we start drawing the trend lines, we start from the right side, we go to the left, and then, okay, this is a peak. We go to the left, we stop when we bump. When we bump into price action, we stop. Is this a peak? No, it is not. Okay, here, is this a peak? No, it is not. It's a CP. Okay, and then that's the top. So that one at the top, that is a peak. Okay, so when we draw the trend lines, we're going to connect 2 consecutive trend lines. The trend line would be exactly like that. Okay, connecting 2 consecutive peaks. This one and that one, ignoring completely the continuation patterns. Okay, but we're going to see that in the trend line lesson. Okay, so on this large movement down, we have one peak here, one peak there, and we've got one CP and 2 CPs over there. That's it. That's all there is. There's nothing else. Okay, you can call this structure whatever you want. This is an engulfing pattern. This is a doji. Okay, whatever you want to call it. You don't need to give candles any names. You just need to know what they do and what they represent. Okay, and obviously one time frame alone is not enough. We need a multiple time frame analysis, and we're going to see that in the lessons too. Okay, but this is the first lesson about valleys and peaks. And I've been talking about this for 25 minutes already, and we just cover one asset. Okay. But you need to have the rules very, very clear, because like I said, 100%, not 99 or 90% of all the traders I've been coaching, they all struggle with this. And this is part of the homework that you're going to have, the assignments, the daily assignments you're going to have in the private online coaching and also on the live coaching. Every day you're going to have to pause up to 20 charts as the exercise, drawing trend lines and valleys and peaks and CPs, multi-time frame analysis for a year and a half, until you become an expert on supply and demand, and we can say that you are like a good supply and demand trader. But it takes time. And it takes, so okay, now you watch this video, okay, now I understand that this is a valley, this is a peak, this is a peak, this is a CP. I know I will never make a mistake. You will. Believe me, you will. So the only way to learn this or any other strategy or any other thing in life is by practicing again and again, over and over and over, same thing repeatedly in a very, very boring way. And that is the only way to do it. I mean, you just cannot accelerate things. Your brain needs to see hundreds, if not thousands, of these patterns in order to click and say, okay, now I got it. Okay? Seeing only a few instances of these scenarios will not give you the right approach. I mean, you will not learn to. You will forget easily that you consider this a CP if you don't see hundreds of these structures. And when there's something wrong after observing thousands of structures that you have done in the past, because you have to do a lot of analyzing, okay, then your brain will create patterns. And when something is going wrong or something looks strange, boom, something will light in your brain. Oops, something wrong there. If there is something wrong, then obviously don't take a trade. And if you are unsure about something, then it should be a continuation pattern or a mess, okay, not a valley or a peak. So let's choose another asset, okay, because I've been talking about Apple, which is the top number one market capitalization stock in the world, together with Nvidia. They are like, well, one going above the other all the time. Aramco, the oil producer in Saudi Arabia, is also there always. Apple, Aramco, and Nvidia. So let's, I don't know, the main ones. This is Apple. Let's take a look at Tesla. Okay, and then we'll go to Forex, probably. Okay. So this is what we have here. So like I said, in order to analyze price action, when you look at the chart, you should always start from the right side. Okay. So here, what have we got here on Tesla weekly time frame? Okay. We're going to look at the 1 hour time frame too on this one. And then I'm going to do the euro probably. And then Bitcoin, the top ones. These price action patterns are happening on all assets, cryptos, Forex. I don't need to analyze a specific asset because it's all the same. Okay, so I'm going to do Tesla, Apple, Eurodollar, and Bitcoin, and you can see the difference in price action, but it's the same. So Tesla broke all-time highs. So what happens here? This is the structure of a potential peak. Okay, the peak is forming, but there's no leg down. Still, we've got a bearish engulfing pattern, and then now we've got a bullish engulfing pattern this week. The 18th of January 2025, and this is not a valley. You could say, oh, okay, but this drops and printed a low. Nope. Okay, this is not a valley. Okay, this is a CP rally. Okay, rally base rally. This is a rally base. It's dropping. The peak is forming, but we want price to drop much farther. Okay. But this could just break all-time highs again above the $500 mark, okay? So this is a potential peak. This is a CP. And if we continue to go down, and we stop always when we bump into candlesticks. So this is oh, wow, this is a valley. Drop, rally. Nope, it is not. This is a CP. Engulfing patterns with very tiny or average ERC, extended range candle bodies, are one of the most common patterns in CPs, continuation patterns. Okay, so this is a continuation pattern drawn like this. This is another continuation pattern. Okay, so this is not a valley. This is not a drop rally, even though you could read, okay, this is a large candlestick body, which is like the average of candlestick body here, like this one or this one. Okay, this is way larger. This is also an ERC candle. The red one is also an ERC candle. It's not a 50% candle. So you could argue, okay, this is a drop rally. Nope, it is a CP. Same structure, same range. It's trying to drop. It doesn't even make a low below the previous low. And then a large ERC candle, and this forms probably a demand level over there. Okay? So this is not a valley. This is a clear valley. Why? Drop ERC, different structures. Okay? It bases. So this is a morning star. Large ERC, spinning top, almost a doji, an engulfing pattern, large ERC. This is a morning star. Okay? Or Harami here. So you can call it Harami, spinning tops. I mean, it doesn't really matter as long as you respect the rules of a valley and you respect the rules for a CP, like this one. Okay? So what about this one? Is that a valley? No. Oh, wow, but look at this ping. So it dropped and then it rallied. It's a valley. Nope, it is on the same range. Okay? It's a CP. This is a rally. It bases and it rallies. This is a clear picture, a clear CP pattern, continuation pattern, as we will see in the continuation pattern lesson. Okay? So this is not a valley. A wick down, no way. Remember, for a valley to exist, we need a large ERC candles or a series of 15% candles that form together a valley. Okay? So this is not. This is a valley. Why? Because look at the ERC candles under the base. Okay? That is, do you think that this one is the same as this one? No, it is not. And you might be saying now, of course, they are completely different. But then a trader, any trader, joins the coaching program and then he argues with me that this is a valley. And that could be you or anyone. Okay? But I've seen this so many times. Okay? So, okay. So this is for this, okay? If we take a look at, let's take a look at the 60-minute or 1 hour time frame on Tesla, okay? Or which is much better. I mean, using the 1 hour is better than using the 4 hour because the 4 hour is almost like the daily, okay? Because remember that the daily time frame is made of six 4 hour candlesticks, okay? But because there are only 8 hours, 8 tradable hours. The market is open only for 8 hours, more or less. Okay. So on the 1 hour, we'll see like 8 candlesticks printed, 7, 8 candles depending on the market, because that's the time the market is opened. So here, as you can see here, there was a gap over there. Another gap over there, probably the opening. And what happens? All-time highs were broken. And then what happens here? We've got a start from the right. And this is a rally base drop. This is a picture of a peak. Okay? Not used for the trend line, because for the trend line we need 2 consecutive peaks. But this is the picture of a peak. Okay? Here, this is a clear picture of a valley. It drops a leg in, large ERC candles closing below the previous candles. Okay, so creating different blocks of price. That's the picture of a leg in, the basic structure, and then the leg out with the gap. And this happens to be also an imbalance on the daily, on the 1 hour time frame. Okay, so over here, we've got a rally base rally. So this rally, this is a CP, and this rally is a rally. It bases and it drops. That's a clear pick. Okay. So here we've got like a drop, base, and a strong rally, including a gap, because the price closed here on that hour, and then the next candlestick, it opened 3.4% higher. Okay, this is a drop-based rally. Okay, so here, this one over here, it drops, bases, rallies, and one specific feature you need to pay attention to when you detect valleys and peaks is what I call the void between candlesticks. Okay, and the void for the valleys and peaks should be obvious. So for example, let me explain what a void is. This is a valley. Okay, drop, leg in, base, leg out. This is what I call the void. For a valley to exist, we need a bullish void created within the leg in and the leg out. Okay, and the same is true for the peaks. Sorry. Price rallies, bases, and it drops, and the bearish void is created. So if we don't have a void, we don't have a valley or a peak. It's impossible. Okay. So if we take a look at the daily time, no, we saw the weekly here. Okay. Where is the void? It's not anywhere. Okay. So for the valley here, the void is here. Okay. For the potential peak, we've got the void there. Okay. For this peak, we've got the void, the bearish void there. But here for the CP, we don't. Okay. So void here, the void there. And if we take a look at this, okay, we've also got a void there. And then full candlestick. Why is this showing there? The void, and then these full body here above the full body. So we've got two structures. So for drawing trail line, we could do something like this. Okay, something like that. And it would create an imbalance over there on the 1 hour to which it didn't pull back. Okay, so we need that. So for example here, is okay, this is a valley. Nope, it is not a valley. We've got 1, 2, and 3. 50% candles. That means that the 2 wicks together are larger than the candlestick bodies, and they are happening in the same range. Okay, so this is not a valley. And remember, there is not a single ERC. So had this continued like this, printing like imagine 3, 4 more, obviously this would have been a valley, but that didn't happen. Okay, so this is a continuation pattern. This is not a valley. This is a clear valley over here. So we've got it legging, it bases, and it rallies. So we've got a valley here. Okay, so you see the difference. The voids, the bullish voids, the bearish voids. That is very, very important to take into consideration. Okay, so this is what we've got here. Good. So let's take a look at now. We saw Apple, Tesla. Let's take a look at the euro dollar. Okay. The euro dollar. Let's take a look at the daily time frame, for example. Oh, this belongs to something video I shared. Okay. That's playing out as expected. The daily supply level expected this, and this is what happened. So let me remove this. And we're going to analyze what happens here on the daily time frame. Okay. So we start from the right side. This is nothing. Okay. These are 1, 2, 3, 50% candles. That means, remember, that the 2 wicks, the upper and the lower, the upper shadows, the upper wicks, okay, and the lower wicks together are larger than the distance between the open and the close. So this is a basing structure. So this is a rally. This is a base. We don't know if this is going to be an ERC, a rally, a CP, or this could be a rally base or an ERC down or a leg down or leg out, and we would have a peak. So right now, this is unknown. We don't know what this is going to become. If this is going to become a CP or this is going to be the basing structure of the peak. We don't know that, okay? So we continue to the left, and then we have this one here. So this is a clear peak. Why? It rallies. Okay, look at this large candlestick above. We've got one structure here, another structure there. That doesn't happen on continuation patterns. Okay, and we've got the bearish void right in the middle. So this is great. This is a peak. Okay, so for the structure over here, continue to the left, we've got the leg out. Basing, 4 or 5 candles, and the leg in, and the bearish void. So we've got a peak here, and we've got another peak over there. Okay? So what about this one? We continue to the left, and then we stop there because there is a pause or a different candlestick structure. So all these candlesticks there are in the same range. This cannot be a peak. We need large ERCs, like this one over here, or this one over there, okay, or this one over there, in order to consider this a peak, okay? So for now, if we had to draw the trend line, we would do something like this, okay? Because these are the 2 latest consecutive peaks, as we will learn in the trend line lesson, okay? So this is not a peak. And then we continue to the left, and okay, good. We've got here another one. This is the structure of a peak, okay? So, oops, what happened there? Why? Rally, base, drop, legging, basing structure, leg out. That's a peak. And the structure here is the leg out, basing structure, leg in, basing structure, leg out. So this is the structure of a valley. The bullish void for the valley and the bearish void for the peak. Okay? We should always have the voids here for the peak, here for the peak, okay? And here for the valley. Always, we need that. Otherwise, it will be a ZP. So here, we continue to the left here. This is not a peak, okay? For a peak, we define later, before, for a peak, we need like rally legging, basing structure, and then the leg out, or rally drop. So you might say, okay, this is a rally drop. Yes, it is. Large ERC, it is not a 50% candle. And then this is a large ERC, which is not a 50% candle. So this is like, per the rules, is a rally drop. But no, it is not. It's an engulfing pattern, part of a CP. For a rally drop to occur, we need very large candlestick bodies, not like the average ERC candle, because this candle over here and this candle over there are the average, okay? Candlestick size, the body. It's the average, as you can see. We want non-average candlestick bodies in order to consider this rally drop. So we would need, imagine a candlestick like this, very large, and then a candlestick like this, very large. Then rally drop. That would be perfect, okay? But it is not like that. This is a CP, okay? Not a peak. And over there, it's clear that this is a rally. It bases with an engulfing pattern, and then it drops, engulfing pattern, it drops, and low, a little bit high, low, 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 and we have analyzed all this already on the daily time frame, okay? So if we take a look at the 60-minute chart for intraday, we've got also very clear structures, because on the euro dollar, it's a forex cross pair, one of the majors. It is a 24-hour market, so having gaps usually it happens maybe with a very strong news, or on the Sunday open. That's it. On cryptos, it's very, very rare to see them, and on stocks they happen every single day. So what we have here, we start from the right, is this large, look at the bullish void, bearish void over there. It's a rally, and then base drop. This is the picture of a peak, okay? The same way that this is the picture of a peak. Rally, leg in, base, and then a drop. And then we have the bearish void in order to consider this a 2 picks. Over there, look at this void here. It means that here we have a rally, a base, and a drop, leg in, base, leg out. Okay? So over here, the same thing. We go left, but what is this? A peak? Because there's this large wick? No, it is not. This is a drop, a base, and a drop. This is a CP, continuation pattern. Okay? This is a valley, leg in, base, leg out. It even prints a high, a valley, a peak. Okay? So this one stands out. Okay? Stands out. So this is a rally, and this is what I call rally drop. Okay? Rally drop. Okay? Because this is not a basing structure. It's just, obviously, it's the imbalance is over there, as I will explain now. But we don't have 50% candles like we do have here, the basing structure here, or we don't have here. This is a 50% candle and everything. So here, what we've got, the trend line over here was broken, and then at the origin on the 1 hour, we had an imbalance on the 1 hour chart that was triggered like 17th of January, Friday, 17th of January 2025 at 4 p.m. more or less. So, and this is on the 1 hour time frame. Okay, we continue here to the left. This is a valley. You can see basing structure there, and then full candles underneath with the bullish void. This is another valley. This is also another valley over here with the bullish void. The leg in, basing structure, and the leg out. Okay, and I could continue like for ages going over the price action here. So we've seen Apple, we've seen Tesla, euro dollar. Let's take a look at Bitcoin, which is trying to break all-time highs again, but there's an obstacle which is trying to play out. So Bitcoin, let's take a look at the weekly time frame, which is the one relevant here for now. Bitcoin. So on Bitcoin, as you can see here, this is all-time high. It broke 107,000. Yeah, 107. Yeah, 107. Yes, 100,000. Crazy, and it's trying to break all-time highs again. So all this, okay, is a mess right now. So we don't know if this is going to be a valley, this is going to be a part of a peak. We don't know because it's been stalling for 1, 2, 3, 4, 5, 6, 7, 8, almost, 8 weeks, almost 2 months doing nothing there, probably accumulating or distributing. We don't know. And here the imbalance is right there. We're expecting price to drop there, but it tried a couple of times, but it didn't drop. So on Bitcoin, this is nothing. It's unknown. We don't know. Once price breaks out or breaks in any of these two directions, we will know if this is a valley, a peak, a CP, or whatever. But right now, it's nothing. This is a rally-based rally. This is not a valley, okay? This is not a valley. This is a pause, okay? And this one is a clear valley over there. Don't try to do this too much, okay? Try to move along with the chart. Don't try to squeeze it, because if you squeeze the chart like this, just to see price action, you will see here a valley, okay? Because if you squeeze it so much, you will not see CPs anywhere. Everything will be a valley or a peak, okay? But this is not how it works. So CP, and this is a valley. You see the bullish void over there? So leg in, basing structure with the bullish engulfing pattern, and the rally. This is a clear valley. And this is the rally. Look at this full candlestick, body closing fully above the previous candlestick. That is creating the bullish ERC, leg in, basing structure, leg out. Okay? Same thing for this. Rally, base, bearish gap, and then a drop. This is a clear peak. Remember, this is not a valley. 2 CPs on the way left, on the left. So here, rally, base, rally. This is a CP. That this one is very clear. I mean, if you tell me or you think that this is a valley, obviously it is not. Okay, that one tried to play out for a little bit and then it just was broken in the past. So this here, this is going to be a valley. Blah blah blah. No, this is not a valley. 1, 2, 3, 4, 5, 6, 7, 8 candles. All those candles are enclosed in this range. It's not a large ERC like we have or a large pin candle. We don't have that. Had we had this over there, then this would have been a valley, but it is not. Okay, so Bitcoin has got lots of CPs, which tells us that there has been a lot of volatility lately without pulling back to the previous impulses. Okay, if we take a look at the monthly time frame, which is much higher, okay, we see this price action here. This is the picture of this is a valley. Oh wow, yes, a valley. Look at this. Low, another low. Yeah, this is a valley. Nope, it is not a valley. Why? 1, 2, 3, 4, 5, 6 candles, all of them trading in the same range. Having a wick down is not enough. We need ERC candles. ERC candles closing below this structure. Full bodies. Okay? And that didn't happen. So this is a continuation pattern, and this is also a demand level on the weekly time frame. This on the month, the same way that this was a level on the monthly time frame that we were talking about this, okay, in previous analysis, and that one hit the level there on 48,000, and then it played out. And this looks like this is going to happen in the following month, in January. It's going to break the all-time high probably, or drop to the weekly time frame. But what we're doing here is analyzing a bigger structure. Okay, so let's go, for example, to the 1 hour. Okay, now since I was on the monthly and I had moved the scale, I need to double click on the right in order to reset it. Okay, so when I do reset it, I will have the normal scale. Try to not squeeze these too much, or you're gonna change the scale of things. Okay, so what do we have here? So we do have that this is what is this for now? Well, I don't know what it is, but it looks like it's going to be a rally-based drop. If it continues to drop, this is going to become a peak. Okay, the same thing here. When we go to the left, this is not a peak. Oh wow, but look at this, it's close above this candlestick over there. This should be a peak. No, it is not a peak. It's on the same range. This is not a peak. This is a peak. You see, we've got a block of 2 candlesticks and then a full candlestick body right above the previous block of price. Okay, so this is a rally and this is a drop. Okay, this is what I was talking about before the definition. For a peak to exist, we need rally legging, basing structure made of 1 or more basing structures, basing candlesticks, and then the leg out. And here, or a rally and then very next candle, a drop. So this is the picture of a peak. Okay. On the way up, this is the picture of CP. So that's on the 1 hour. Okay. If we take a look at the 4 hour time frame, okay, reset the scale. This is what we have. The one at the top is a dark cloud cover, bearish piercing pattern. There's a rally, base, and a drop. This is a clear peak. But here we've got rally, base. These are not valleys. These are CPs. Okay. Here we've got like this structure over there, and then we've got a full candlestick body with a wick, very large wick. Very large wicks also form valleys and peaks. Yeah, they have to be larger than the average. As you can see, this is larger than the average wick that you see on the chart. Okay, so this is a valley. This is not a valley. All these candlesticks are sitting in the same range. Okay, so this is a continuation pattern, and like I said, we could continue like for ages. It's been like almost 1 hour doing this. I could continue like for hours and hours, because the more I analyze, the more nuances I will be explaining, because obviously there are so many different combinations. But remember that we want a peak large ERC candlesticks or little tiny 50% candles that after printing many in the same direction, they create a rally, the leg in, or the opposite for the leg out, okay? A basic structure and the leg out, or a large ERC, a large rally, and then a drop, like this one over here, which became the bearish piercing pattern or dark cloud cover. Okay, so this is a clear peak too. Rally, base, drop. This is not a peak. 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 Okay, all these are continuation patterns. We will see in the continuation pattern lesson. And here we do have a valley, drop, base, rally. Okay, and you can see the void over there. You can see the void over here. So this is bullish void for a valley is critical. It's necessary. Okay, and like I said, I could spend hours doing this, and this is what one of the exercises that you're going to be doing if you enroll the coaching or mentoring program, where you're going to have exercises every single day. But that means like a lot of work you have to put in over a year or more, because there's no other way to learn. I mean, okay, you might have understood valleys and peaks, or you think you have understood valleys and peaks and the differences and everything in this 1 hour video, but you haven't. You think you have, but you haven't, because your mind, your brain is not that smart. Okay, our brains need to be exposed to the same scenario for a long period of times in many different circumstances, so that it understands that it's a pattern, creates a pattern, creates a habit, and then the next time, after hundreds of times, then you will say, okay, now I got it. But watching 1 hour video is not enough, and also your mirror neurons, okay, neuronas espejo in Spanish, those are the neurons that are trying to replicate what you are doing. Okay, when you are dancing, when you see somebody moving and you're standing and looking at the other person, your mirror neurons are trying to, without you doing the exercise, they're trying to replicate it, and they help you execute the exercise, that like in dancing or doing any other craft. Okay, and when you are watching a video doing nothing, you're not seeing me doing anything, just the mouse hovering, the crosshair, your mirror neurons are doing nothing. Okay, because there's nothing to replicate. So you need to do this over and over, hundreds of times, thousands of times, to really understand the differences between valleys and peaks and CPs. Okay, it's not only watching the video, reading a lesson 10 times. You need to practice. You need to get your hands in the mud. Okay, thousands of times. There's no other way. Otherwise, what you might be looking for, maybe is for a signal service or somebody who to give your money to invest it for you, but you do not have the blood to become a trader. You need to put a lot of hard work in. Okay, so and to do a lot of exercises. So these 1 hour videos of valleys and peaks and the different nuances, there are many more. Okay. They can be seen when you are enrolling in the education program and doing the exercises too. Okay, but I believe that this 1 hour video it's clear that there are many differences, but it will help you understand many of the nuances and what we are looking for. Remember, rally, strong rally, okay, leg in, base, leg out. This is a clear and obvious one. The same way this is a valley, leg in, base, rally, are very clear ones. This is not clear. This is not clear, okay? Not clear, not clear, not clear. Clear, 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 okay? This is what we want, okay? So enjoy the rest of the course. Have a great day.